What's up, guys and gals? Lee Ryder here, Crypto Didact, and welcome to the first video in our basic technical analysis video series. Today we're going to be covering how to read a candlestick chart. This is going to be our most basic tool, and it bears good understanding as it's part of a solid foundation. So without further ado, let's get to the screens. Alrighty guys, well, welcome to our quick lecture on Candlestick Bar Basics, why we use them and why we need them. So the first thing we want to understand is what data is being represented in the candle. And the first thing we want to understand is that each candle is composed of a period of data. So that can be monthly, weekly data, hourly, a 10-minute, 1 minute, whatever custom setting you want, and that essentially is saying, let's say it's a daily candle, over a 24-hour period, what was the price movement during that 24 hours. The next data that's in that candle is going to be the open, the close, the high, and the low price. And then the third is the visual representation, and your charting package will print out a candle like this. And there's two basic forms of candlestick bars, and it's going to be a bullish candle and a bearish candle. Now generally your bullish candle is going to be green and your bearish candle is going to be red, but this can be changed in your software, but this is the standard form. Now the first part of the two that makes up the major parts of the candle is the body. And the body is showing you where the candle opened at, or where the period opened at, and where it closed at. So in the instance of the bullish candle, you can see that the opening price was low and the closing price was higher. So price moved higher, it closed higher in that period. On the bearish, it's going to be the opposite. The opening price was up here, and during that period the price closed lower. And so that's what makes it bearish. So the second part of the candle is going to be the wick. And now the wick is showing you the price movement outside of the opening and closing price. The upper wick is going to show you the upside movement during that period. And the lower wick is going to show you the downside movement of the period. The same with the bearish, upside movement and downside movement. Now candles do not have to have wicks. Sometimes you will see a candle that has no upper wick or no lower wick, but as this is just an introduction, you're likely going to see wicks on candles. And when we talk about patterns and different kinds of candles, we'll talk about that more, but this is just what you need to know. The upper wick is showing upside movement, lower wick is showing downside movement during that period. So in review, in the bullish candle, the price is going to close higher than the open, and that's what the body is showing you, the difference between the open and the close price. And the wicks are showing you the range of that period, and the upper high and the lower low. And same thing on the bearish, you're going to have the high and the low, and then the closing price will be lower than the open. So I hope that helped you guys. We're going to dive a little bit deeper into the next video where we actually start charting these, and we'll start seeing them in a sequence, and it'll start making a little more sense. So see you in the next video.